Good morning. So we got Jaim, we got Nadia. And we got Renee. Hey, Renee.
Morning.
Good morning. And who else is on the call right now? Just you guys? Anybody else? Okay. So thank you guys for joining in right now. So that tells me something again. So Renee, you're going to be first up today. So what we're going to be touching base on today is basically, I know you've been having questions, Renee, and I know you don't really get it from yesterday lesson, which is from Sunday. And you were there, you were talking about Alex. I don't get it, man. I don't get it, man. All right, so what we're gonna go through again, I'm gonna show you. And I want you guys to take notes as the lives go along. So we're gonna run through the same thing that we did on Sunday. And basically, how I'm gonna do this illustration right here is we're gonna start from market structure, and we're gonna go through market structure that relates to the market expands, contracts, and go into a trend, right? And then we're gonna touch base on support and resistance in the market and how you actually get the different zones within support and resistance and how market structure is playing out. And do remember that price is what is happening every time. Okay, price is what is actually driving the market. Okay, so I need you guys to really interact with me today, like not just mute your mic, but I want you guys to unmute your mic, ensure that your background is quiet. And then when I'm talking to you doing the charts, I want you guys to interact with me, right? Very important. So this is not, this right here is not a session where you actually mute your mic. This class is different. This class is supposed to fast track you within 2 weeks to help you to understand, right? So let's begin. So right here, we're gonna look at the candle. Now these candles right here, I want to look at it as a money. It is money, right? And it's price. It is money happening in the market, and there's a reason why the candle is green, why the candle is red, right? So price is happening in the market. And we did went through the process of saying that it based on if the market is a bullish, meaning long, that you have it's going up. If it's short, bearish is going down. We understand that, right?
Yeah.
Yes.
So follow the instruction, guys. Unmute your mic. Just take my little advice. Just unmute your mic and let it remain there. So what we're going to look in is market structure. So let's look at how the market contracts. So the market is always doing this. It contracts, it expands, and then it goes into a trend. And you're going to see this play out right through the whole thing. So that's a downtrend right there.
And how do you know when exactly when it contracts?
When it goes sideways, consolidating.
Okay. So they're not on one level. They're not for being on one level. Them can, as long as them go sideways.
Right.
That means contracting.
So,
okay.
Right. So look, right here, all this right here, the market is contracting right here. You see that?
Yes.
Then it goes into a trend.
All right.
Go into a trend.
Sorry.
So right through, you're going to see our market contracts. It's contracting here.
Okay. How do you know it? At what point is it expanding then? The point before it goes into the trend?
Say that again.
At what point is it expanding? The moment before it goes into the trend?
Right. So it always expanding trend. So it's contracts, number one, expand, number two, and then it goes into a trend.
All right.
Always
So then would the market expanding be the last candle before it goes into a trend?
No, because the trend is actually the extension of. So you have extension, then you have trend. So trend is the end. What is it telling you? Is it going to go into right here, right here? This is a bearish trend, which is the market is going
Right.
to a sell state.
Right.
So
So
right
you
here,
said that.
so right here, look. So contracts go sideways right here. And then this here, it expands. When something expands, it means it get bigger, right? So this candle in particular, this big red candle right there is the expansion of the next one right here before that, right? It's bigger than this one. So what I'm saying? So right there is expansion, and then it continue to go into the trend of the expansion.
Right. So then that's what I was asking. If the point of expansion would be the candle, I guess then that leads into the trend.
Okay. Exactly. So expansion always lead into the trend. So always. And then the trend can be either way, up or down.
Right.
So right here, you'll see the contractions taking place right here. Here it start to expand. This red candle right here, this is known as a retest. And then it goes into an expansion, and then it goes all this into a trend. Okay? So all this right up here is a trend. And this is what you call what kind of trend now? What kind of trend?
Which one are you on?
Bullish trend.
Or long trend. Yeah.
Right? Bullish or long trend. Right? So this here is bullish. Very important. Very good example for you guys to actually look into.
Just please explain further to me about the retest.
So the retest is that it's taking price. When price is happening in the market, it has to do its thing. It has to actually goes into a state of testing if there is any more buyers or sellers in the market, basically. Okay. That's what is happening. Right? So what I want to also do is show you different areas of the market, and it's happening right throughout the market. And I need you guys to identify the market when these are happening. So here it is as well. And right through, the market is always doing something. So if you go here in this market, for example, and I want to use here, the market contracts, expands, go back into a trend, contracts, go into a trend, contracts, expands, go back into a trend. And the same thing is playing out right here. This is known as a jigsaw. And I do this on a higher time frame right now, on a 30 minutes, to actually show you what is happening right here. Jigsaw. So you're going up and down, up and down. Jigsaw. Now, I'm also going to show you something that is pretty cool. Now, you actually need to know how to read the chart itself. So right here, as you can see, this continues up into an uptrend. So what I'm saying? So let's change the time frame, for example. Let's go to a 4-hour. You remember what 4-hour is all about? What 4-hour is about?
Indicates where the market is going.
Right, it's known as a bias trend.
Bias trend.
Right, so you see where the market is going, and then you can actually look at the lower time frame. So I was looking at 30 minutes a while ago. You can look at a 1 hour. And if you know that the market is in red in a 4-hour time frame, because you'll see these candles right here that tells you. You're not guessing it, you know, you're looking at it. It tells you right here. That's red right here. You see it?
Yes.
Good. So if you go on a lower time frame with, for example, the hour, you're gonna still see these candles over here that red. You see it? Same thing.
Yeah.
So you use the 4 hour to see what is happening. 1 hour for analyzing the market. 30 minutes, you can do for observation. 15 and 5 minutes, 1 minute, all these 1 minute, 5 minute, and 15 minutes, there are entry points. Laser entry at 1 minute, 5 minute, or 50 minute entry.
Please, what is the 30 minutes for again?
You can just observe the market there, or doing more assessments. But the fact is, whatever the time frame is, so look here, when I change here, look, you're on 1 hour, you see that right here? Still red. So you click it, 30 minutes, look, still red. Got it? So let me zoom up. See it? Look at it. You see it?
Yes.
Okay.
Still there. If you go here to 15 minutes, still there. If you go to 5 minutes, still there. So basically what you're doing is that you will see that it gets, it's actually zooming up. So you can zoom out as well. Look. And all this is happening right there based on what we did on the higher time frame. All this is happening. So if you go to a 1 minute, you will see that as well. Still doing the same thing. That point in time, you can zoom up as well. You'll see it. So on a laser entry, there's a lot more activity in terms of the charts, and the price is moving much more faster. This is a minute. So what we're gonna do is 4 hour bias, so what is happening in the market. Then we analyze what's happening in the market to ensure that what we're seeing is correct.
So
and then we enter on a 5 minute or a 15 minute. Very
yes,
important.
Kevin, so these basically help you with the prediction of the market then.
Basically, right. So that is why now on the 4 hour time frame, how I do it is here. So you will see right here, it is red and it's a bias trend. And then now you will have the moving average. The reason why I have the moving average is to help you to understand if the market is on a high or low. So watch this carefully. This blue line right here, you see it?
Yeah.
Yes.
It's called a moving average. Hear me? Moving average on a higher time frame or a lower time frame. So my moving average, how the market is moving, is on a 50. You'll see moving average 50. See it?
Yeah.
And then I have a moving average of here, the purple line of 13, and a moving average of 8, which is the white line. See it? So let's go right here now and look and see what I'm doing right here. So let's zoom up a bit. So here, if you look, you will see that I do something like this right here. You'll see that the blue line cross the white line, cross the yellow line, the purple line. You see it? Now, which one is at the top?
It looks like the blue line, but we can barely see it because it's.
Let's go again. Which one is at the top?
The blue line.
You sure?
At the top?
At the top.
Based on what you're showing.
What is happening right here? Look, you have 3 different lines. Which one is the highest?
The white.
The white, right?
Mm-hmm.
But the white is a lower time frame, right?
Yes.
Average of 8. See that?
Yes, 8. Mm-hmm.
Good. So that tells me that it crossed the 13 and the 50 right here. You see it?
Yeah.
So that tells me if the market is on a high and this blue line was here, that means the market would be in a what? A more state of in a higher time zone of a moving average.
Okay.
So the 8 is on a lower time frame. So when things are lower, what it means? Short, what it means?
Bearish, I guess. But Kevin, quick question.
Answer the question. What does short mean?
Bearish. That's what I said.
So what I'm asking right now, right here in price with these candles, They are green or they're red? Right here, what are these? They're red or green?
Red.
They're red, right? So when the moving average cross the higher time frame, it tells you. So at any given point, it will tell
Okay.
you either you're gonna be on a lower time frame, and once you see the lower time frame is higher than the moving average that is 50, which is this blue one, it will indicate that the market is in a downtrend. See, that is the reason why you have moving average and how to move and watch the lines, what they're saying to you. They're telling you a pattern. So if you zoom back out, you'll see how that looks. You see it? See it? So the lines are not there just for decorations. They're actually telling you a story.
How do you plot the lines, Kevin?
Hmm?
How do you plot the lines?
How do I do what?
Plot the lines.
How do I got the lines?
Yeah, how do you plot the lines?
It's not me plot the lines. It's actually the
It's
market
just there?
The market
Okay.
plot. The market does its thing. And based on what the
Okay.
market does, then I'm reading it. It's telling me a story. So that's the level I want to get you guys at. It can talk to me. It's just telling me what I'm doing.
All right, then, Kevin, can you please just go back one more time for me?
All right. So, sure. So in the markets, right?
Mm-hmm.
There are prices happening all the time, right? There's a reason why you have a setup just like what you're looking at right now in front of you. You have it just like that, and you want to know what's happening. But how you're going to know is this: the market is playing out a story. Now, in the market, a price is happening. So you're not trading against candles. You have to trade against people. Remember that. So right here, you might see candlesticks and so on, but you're not trading against a chart. You're actually trading against people. Write that down. So these people is telling me a story. And the market is talking to me. It's telling me what's up. So how you're going to read this is this. Before you can read it like that, I want you guys to get some basic understanding. Market structure, the market goes into 3 different states. Either the market contracts, expand, or go into a trend. The trend can be bullish or bearish, doesn't matter. Or it's consolidating going across. Okay, we understand that. Now the next part of the thing, the equation is that you have time frames, right? And in time frames now you have zones. So right here, I'm gonna create some zones and show you. So we touched base on yesterday. Higher time frames, higher highs, lower lows, and lower highs. So I'm gonna show you something, and I want you guys to pick up what I'm saying. At any given time, price is happening. At any given time, price is happening. What moved the candles is price. Remember that. So imagine if I put this ball right here. Hold on a second. Let's start right here. And this is price right here. And let me go further. Let's start right here. This is price, and price is taking place right now. And what price is doing, price is gonna start. Now when price start, price is gonna go up, and I'm gonna move this to go up a little bit more. So price is gonna start from here. This little candle right in the corner right here. And price is gonna move up and down, up and down, up and down. So this ball right here, imagine this ball is price right here. And it's happening right here. Price carry the candle up and down. But when it moves in, it is actually, it don't move go all the way down here. The candles is retesting, is going up, is moving within a frame, right? So right here, this is known as price, the action of the price, known as price action, basically. And these terms, you're gonna get familiar with them. So I'm gonna pull it up some more so you guys can see it. So imagine this ball right here. You can put the ball out here. And the ball is coming into your court and it's going up. The ball is going up, down, but it's bouncing between. And this is price happening. Same thing with these candles right here. These candles goes up, come back here, but it didn't go back down to the line here. This line down here was known as support. Up here, this line was known as resistance. So within price happening, you have support and resistance. So down here is known as support. This line here, this long line here, this line is known as support. And up here is going to be a resistance. So within price moving in market structure of the market, this is known as resistance. See? So this, imagine this is price. And I want to label it as best as I can right now. And this is price right here. This is price. And price is moving. And price is going up, down, just like the candle. So these candles represent price. This candle didn't go all the way up here to this resistance. However, this one did. So if I bring this down to the wick of that and touch it to the bottom of this, and we started here, it goes back here and it goes up and then it comes back down, which is this red candle here. But it didn't come back all the way down to here to this line, which is the support line. So that tells me that there is a next frame right here. So every candle, every movement is happening in real time. So imagine none of this over here existed. What is happening right here is support and resistance happening right throughout. If this here and it breaks and goes down, which this big candle here, this is known as it breaks into a new time zones. So these areas here, 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 all these are known as zones. So there's a lot of things happening as looking at a chart. There are different zones within support and resistance. You understand?
Yes.
So right up here is a next zone. So this is a lower zone, and this is a higher zone, and this is a higher zone. So you have lower highs and higher highs. Lower lows. So you could mark the chart up right across. You can have it this here. And I'm going to show you what I'm talking about right there. And then on the bottom here. So right on here is called lower. Lower highs. Lower lows. Highs. Higher high. All the way up. And that's what is happening right in front of you. Right now. That's what the chart is saying. So, not to confuse you, but that is what is happening. So price is moving right through. And when the price is moving throughout, right here, it contracts. See, start to contracts, tells you. Contracts here, it expands, and then it goes into a trend. You reverse, goes back into a trend of up, contracts, goes back into a trend. Contracts, goes back into a trend up. Sell off, goes back into a trend down. And all this is happening, this is price, and price is doing all of that. So it's basically, when it comes into the market, what is happening into the market at given time? What is happening with the buyers and the sellers at that point in time? And do remember that within the market, whenever retail traders are doing one thing on the other side, the bankers are always doing the other thing on the other side. So when we're buying up here, why you see these big candles is because the banks themselves, they know that you're doing this. So they're actually doing this on the other side. They're selling off on the other side. So these big candles, these are when institutional traders comes in. And you'll see them right through. So you have institutional traders, which are hedge funds, banks, brokers, and that's what happened. When they come into the market, they do some serious damage because they mop up dumb money, they call it. They mop up dumb money. So retail money, small traders money, they're called dumb money. When they come in with their money to go against your trade, they will crush you. Their money is known as smart money because they have a lot more money. So you understand that you have different zones that is taking place in the trade. Very important. So if I want to put the candle, different zones, and price is happening in all of these zones. So just remember the bouncing ball and it's moving and what it's saying to you. So if you want to go to the end of the chart, right here. So this is telling me something as well. It's telling me that this up here is a different zone. Here is a different zone as well. So this here is a lower zone. This is a higher zone. And it can break this zone here and go up further. And this is known as higher highs in the market. So you can look for the last high in the market. And you can look at the bottom of the chart. It tells you. Look at the dates down here. They tell you August. Here it is. Running right up to September. It tells you 31st. So this action happened between the 31st of August, 27th, 38th of August, 31st, right up to the 6th to the 7th. See, I'm telling you what's happening this morning, right here. So if I should draw a trend line from here to see what's happening in the market, that's a higher time frames right here. And that is telling me something. You see it?
So what is it telling him?
It's actually telling me that the market right now is going up, and it's retesting after this, and it's going back down to the trend. So the market here with Euro versus Great British Pound, it is in a downtrend. So all of this is red. So don't get it twisted. All of this right here is red.
Despite the green
You have
candles.
more red than green, basically. So you have more sellers in the market than buyers. So what I'm saying? So this is just a retest right here. And the market is actually, this is a retest right here. And the market goes into institution traders coming right here, mop up the money on the other side of the markets. And right now it's retesting to go back down into a trend, to a lower trend, and a continue to be a downtrend market with the Great British Pound versus, or the Euro versus Great British Pound, basically. That's the currency pair right here. That is what is happening right here, right now. That's what the market is doing. So you can watch it and see, and I have the time frame right here that is telling me right here. And my trend line is telling me the same thing as well, right here. It's telling me that my moving average is on a lower time frame, which is 8, and my higher time frame, which is 50. Nobody really buying in the market right now. What people doing is selling on a lower time frame, which is a moving average of 8. And that is exactly what is playing out right there in front of you. So what I'm saying? Got it? Got it?
Still kind
Yeah,
of,
yeah. Mm-hmm.
still kind of unsure about the party still. Yeah.
We got 6 minutes on the call. Tell me what you don't understand. Anything that you don't understand, tell me.
Yeah, man. The moving average, man, and the time rate, time frame, them the lines, and how they really come into play for you. Yeah.
So what I'm saying to you is this now. Your timelines that is happening and the moving average is telling me how the market reacts to persons in the market. I'm saying to you, if you look at the market, you will see right in front of you will see the downtrend. So if you look on a higher time frame over here, you will see that is a continuous red going down, bearish market going down. You will see that.
Yeah. Yeah.
What I'm saying to you is that even though you're seeing this right here, the market actually have some buyers that comes in as well. So even though you have sellers at the same time, you're gonna have buyers. So when you have sellers, those persons are actually buying up the sell, right? So the market is happening in 2 different sectors. You have buyers and you have sellers, right? If you go to the market, somebody's selling cabbage, and then you're gonna be the buyer buying the cabbage. So you have the vendor that is selling the cabbage, and then you have the buyers who's gonna buy the cabbage. Get me? Same thing with price. It's same thing. There's always a situation where you have buyers and sellers of what is happening. In this market right here, Euro versus Great British Pound, is telling me that the market is selling off. Euro is selling off Great British Pound in the market right now. And you have buyers that are institutional traders, these big candles that buying it up on the other side. And it's also telling me now that the market is contracts, and it starts to indicate this one here is going to be confirmed. So this candle, red candle here, the first candle is known as indication candle. Whenever you're going to watch it to indicate what the market is going to do. This candle, the first one, is known as indication. The other candle, this one, that don't fully flesh out yet, is known as confirm. So when you're gonna do the markets, if I was supposed to do a take profit now and a stop loss and I enter the market, I would wait and to see what this candle does. This last candle here. I'll wait and see what this candle is doing. Because this candle here is gonna indicate to me, the first red one indicates, and then the second one confirms what the first one did. So it indicates, confirms, and then it's going to actually tell you if it's going to start going down into a trend. See what I'm saying? So it contracts, expand, and then go into a trend. Same thing is how it's happening now, playing out. Got it? Now also the moving average is telling you at any given point which is higher, which is at the above. This one here, the moving average of 8 is telling me that it's on a lower time frame. The volume is lower. And that is right there, it's in red. And it's actually moving over now to the 13. So it's telling me that the 13 is still higher than the 50. If you look closely, this purple line here is a moving average of 13. See, tell you, it's still above the 50. Let me zoom in some more. Look at it. Here it is, you see it? Still above it, you see it? Do you see it, guys?
Yeah.
Hello? Are you seeing it?
Mm-hmm.
So the moving average is higher than the 50. It's above it. So it still tells me that we're still on a lower time frame. And that's what's happening right here as well. Everything is on a lower time frame. So I'm waiting for this candle to exhaust itself. And then I will do an entry. So if I wanted to do an entry, I'll go up on a 5-minute chart, look at the markets, what's happening. Go to the end, look at it. I take entry on a 15, see what's happening there, if there's an entry. I'm waiting for the market for this candle to exhaust. So even though you'll see it on a 4-hour time frame, we're telling you what is happening in the market. The 1 hour is to analyze the market. And you can see that right there. So I'm waiting for it to actually do what it needs to do. So the market, sometimes in the market, you don't need to actually enter the market. Because right here, it tells me that the market is starting to go crossway. Start to consolidate. When the market is consolidating, you stay out of the market. Wait until you see the market is about to go into a trend. Then you go into the market. Understand?
Okay, so essentially you're waiting for it to start
You will hear people
operating
say
on
waiting
the
for. You will hear people say they're waiting for a setup. They're waiting
right,
for
but
a setup or entry.
okay, but based on what you explained, you're waiting on it to start trending on the highest moving average.
Not necessarily,
Okay.
because you can buy. You can actually
Mm-hmm.
enter the market in a state of sell, or you want to buy. What I need the candle is to tell me to confirm which way it's going. Right now, I don't know which way it's going because here is a retest. Here is indicating, so I'm waiting for the next candle to appear, and then it will tell me if this is going to be actually a situation where it's going to go into a continuous trend. So now I can put my stop loss up here, and put my take profit down here, and continue if it's going to be a sell market. We're going to reach that